They absolutely do, and these two companies in market share are about half of those FANG stocks. So it's important that we're watching these when we're reporting later today. For Amazon, we're looking at revenues of $57 billion, earnings per share of $3.21. Last quarter, Amazon had blockbuster earnings. So some analysts are saying that even if they come in line or just slightly beat, the stock could have some downside risk here. On the Alphabet front, we're looking for revenues of $34 billion. EPS of 10.29. Again, a big beat last quarter. So the question with both of these companies is if we can keep the momentum going.
Can I ask you the margin question? Because all through this reporting season, investors are trying to see what that inflation increase and compression of margin has meant for companies. And Amazon, of course, was a headline story several weeks ago, talking about an increase to the minimum wage for all workers to $15 per hour. It's not clear how this is going to impact the numbers at the top and bottom line, but we could see it today.
That's right. There has been some talk that decision to increase minimum wage to $15 an hour could impact revenue this quarter and certainly going forward as well. That is seen as the biggest downside risk to Amazon, though I will say a lot of analysts think there are other segments in their business will have enough momentum to drive revenue higher this quarter.
Just to reiterate my point, when you have high valuations, your propensity to be more volatile as a stock is much greater. So it seems to me a no-brainer. Correct me if what am I getting wrong here? Because I look at Alphabet valuation at 23 times forward, and I look at Amazon valuation at 69 times forward, and I say one will be able to weather volatility in numbers better than t'other as well. I mean, it just seems a no-brainer when you've got one that's 3 times the price of the other in terms of a P/E ratio.
It seems like a fair thing to say. Okay. We have Alphabet stock has not performed quite as well as Amazon over the year, up about 5%. So that is something to be aware of going in.
It's a track process, though. When you think about Amazon, you think about e-commerce and you think about cloud and how it's bringing momentum through 2 different channels. When you think about Alphabet, is it really about this advertising dominance that it's got and search? I mean, I feel like there are challenges because of all the privacy issues that may have pulled Alphabet back more so than Amazon at this point if you look at the stock price.
Yeah, well, absolutely.
But the cloud numbers, I mean, I wasn't even in, but did I, well, I might have been doing some reading, I might not have been, but did I see Azure cloud revenues were up 76% as well this week already?
They slowed more than in the prior quarter.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.